Hello and welcome to Business Today Television. I'm Siddharth Zarapi and you're watching Market Today. Joining us now is the Executive Vice Chairman and CEO PDES of Happiest Minds Technologies, Joseph Anantharaju. Welcome to the show. Joseph, thank you very much for
Thank you.
joining us. Let me begin by asking you to provide our viewers an overview of the latest financial performance of the company.
Siddharth, we had another good year. Our growth in INR revenue growth was 14%, and in dollar terms, we did 11% growth. Our EBITDA margins came in at around 24.6%, and if you look at from a geo perspective, we did see during the quarter growth cutting across all of the geos, and we're able to report, an EBITDA ahead of our guidance range for the 16th quarter consecutively. All in all, a strong quarter and a strong year.
Joseph, how would you describe your margin performance in the year and the quarter under review?
Given some of the pressures that we faced, I think the margin that we finally were able to report of 24.6%, I think, and which is ahead of our guidance range of 22 to 24%, which is what we had given 3 years back when we went public, and we've consistently been able to be ahead of that guidance range. So we're quite happy with having another quarter where we're able to exceed our guidance in terms of EBITDA.
Joseph, what's the outlook that you have for the current quarter and the full year, given the kind of situation we have seen the IT sector being buffeted by and your own particular operating mix? What would you tell our viewers on that now?
As you know, Siddharth, we just announced two of our acquisitions. One very small, more of a roll-up of the India operations, which is Macmillan India. And just last week, a week before last, we announced the Pure Software acquisition. Our organic pipeline also is very strong. So between the organic and inorganic growth, we're not giving a guidance right now because we're still sort of factoring in cross-selling and all of these other aspects. So we're giving an estimate of between 35 to 40% as the growth range for FY25. And again, in terms of margin, we're, as you know, to pay for this acquisition, we will be using some of our cash, which typically would have contributed to the EBITDA. And so we're going to start looking at operating margin, but the EBITDA range that we're going to give as we look at the acquisition and some of the impact of cash being used up, we're looking at around 20 to 24% as the range that we want. Again, this is an estimate while we work through some of the numbers post the acquisition. So looking at a strong growth in this year of 35 to 40% as we speak.
What about client additions? What has happened in the quarter under review, and what is the outlook as far as client additions are concerned?
Sure. So in the quarter that just passed by, Q4, we again had a pretty strong quarter in terms of new logo acquisition. We had 10 new logos that we were able to close, and I think the heartening fact was it was spread across all the four geos that we operate in. We had 2 logos in India, 1 logo in ANZ, and 1 logo in Europe, and 6 of our logos in the largest market that we have in North America. The end of the year, March 31st pipeline was quite strong. It's among the highest that we've had. And if you look at the revenue growth for Q4 cutting across various geos and verticals, I would say that all the geos did show good growth. And the geo that I'd really like to call out, which also is one of the geos that we expect to do well in FY25, is India, just on the back of increasing pace of digitization and the economy being relatively better. If you look at the other geos, we did see the percentage share of India revenues pick up all the way across the various quarters of last year, and we expect that to continue. Our pipeline in India is quite strong. And if you look at from a sector or segment perspective, a segment that really stood out for us last year was healthcare. You would see again, from Q1 to Q4, the percentage of revenues kept going up, and we've developed capabilities in a couple of areas out here that you wouldn't hear from others. Things like bioinformatics or working in on more of the diagnostics and medical devices. Those are areas that are doing well for us in the healthcare space. Again, CPG is an area that we've seen doing well. There's a lot of investment in terms of using analytics to make sense of all the data that they're collecting through interactions with the end users, and therefore analytics is playing a big role out here. At the same time, user interactions and how they engage with the end customer is an area that's seeing a lot of investment. So CPG is an area that's doing quite well for us. Industrial and manufacturing continues to see a lot of spend on modernization, on analytics, and on IoT, leveraging IoT. So that's the other area that we are seeing quite a bit of traction in, Siddharth.
Joseph, how's the generative AI unit performing, and what kind of traction have you seen in that new vertical?
So that we announced the formation of the new business unit actually in October, Siddharth, and in the 6 months before we started the year, we made sure that we put the entire leadership team in place, whether it's on the sales side, delivery, technology, and the executive leadership. The whole team is in place right now, and by sometime November, December, the capability building and market outreach was on in full earnest, and we're really happy to see the progress that we made. We have 14 customers as we speak, where we are doing either a POC or an implementation of GenAI use cases, and we've had multiple other conversations, at least 50 other conversations. And what we are seeing customers in three buckets. Customers who have heard of GenAI and want to see how to engage it. So very early stage. And here you need to go through a process of understanding their business and trying to zero in on what could be the use cases. Second is customers who have use cases in mind and they just need validation and whether this is feasible and what kind of benefit they would get. And here you go and do POCs and demonstrate the viability as well as the benefits, and then you get into implementation. The third bucket is where customers are clear about what they want to do and they're getting into implementation. So we have a few customers in the third bucket, quite a few customers in the second bucket, and many conversations going on in the first bucket that we expect will move through the deal flow during the year and result in business.
Joseph, the IT sector is a people's business, and companies like you and so many others are very large employers. For you, the attrition rate has reduced, but as I understand, remains somewhere around 13%. Are you okay with that? And in the current financial year, what are your plans as far as employee additions are concerned?
So, as far as attrition is concerned, Siddharth, we expect it to stay around 12-13% this year. If you really see one of our businesses, the infrastructure and management and security business unit, it's a three-shift kind of a system, right? Business, and so the attrition in the infrastructure side typically tends to be a little bit higher. Having said that, our goal is to get the attrition rate down a percentage or 2%. A lot of effort that went last year to bring the attrition down from the 20% that we had the previous year in terms of people engagement, multi-skilling, training programs, giving people opportunities on newer technology. So all of that has paid off. For the coming year, right off the bat, if you look at between Macmillan and PureSoft, we would be adding around 1,200, 1,250 people. So that would add to the 5,200, 5,200 plus people that we have, and take us close to 6,500 or so. And we will our utilization is currently at around 75%. So we do see some headroom for generating additional revenue by pushing the utilization closer to 79% or so, and then the rest we will be going into the market to bring people on board. We did add around 250 or so campus recruits during the last year in a staggered manner, and they've all finished their training. So these people also would be available for deployment as we speak. They're acting as buffers, and they've been deployed into various projects to give them hands-on experience. So that's another pool from which we would be able to deploy on projects and cater to some of the demand that we have.
Joseph, what are the plans, if any, with regard to any future acquisitions? You were sitting on a tidy pile of cash as well. So, do you have any plans in that regard?
So, as you know, Siddharth, these acquisitions tend to be binary in nature, and this one took a fair bit of effort, but we're really happy that we're able to close Pure Software. It's a pretty significant revenue. But having said that, I think there's a lot of effort going on. We are talking to quite a few acquisition candidates, reviewing it, and our goal is that we would like to have one to two more acquisitions that we would be able to close during this year. At least close one and identify another one. So there'll be a lot of effort, continuing effort on acquisitions, and we will take a similar approach, looking at specific subsegments or technologies in which we would like to build critical mass in the digital space. And so that effort is underway. Hopefully, we will have some results to share soon.
Okay, we look forward to that. One final question, and this is a broader question about the overall sort of environment that IT companies have been operating in. The last couple of years have been volatile after that big digital boom. What's your own sense of how the IT sector is likely to shake up given the overall situation, especially in core markets, key markets like the United States?
So, at least what I'm seeing, Siddharth, in discussions with customers and prospects, is that there is intent to invest more in technology, because I think any kind of new offerings or cost optimization nowadays can be had only through technology, and so that latent demand, I feel, is still there. I think it's a factor of customers feeling comfortable with because again, if you look at the macroeconomic situation in US at least, whether it's in terms of economic growth or unemployment, they all are looking positive. I think it's more of the geopolitical situation and an overall fear that businesses have, that's holding this back. And at least our experience has been that if we can target our offerings to the right areas, things like Gen AI, automation, AI, which are allowing customers to introduce new streams of revenue or help them optimize on cost, there are opportunities to be had. So I think we need to be a little bit more targeted and selective or circumspect in the kind of opportunities that you go after, and you will be able to get business. That's my reading, Siddharth.
Absolutely, and that's the overall macroeconomic climate that most companies are operating in. Joseph and Anantharaju, thank you very much for your time with us today. With that, it's a wrap on this earnings call with Happiest Minds Technologies. We'll be back with more. Until then, goodbye.